Hey everyone, welcome to March and welcome to the market update for real estate in the Calgary area. For those of you that follow my videos, I think you're going to find this one probably more interesting this month than we've seen in a long time, because this market just is on fire. And at this very moment, there is no real end in sight, but I'll talk about the future in just a minute. But let's just dive right in. We are looking at detached houses right now, and you'll notice that it has 112.86% listing absorption rate. And the reason that is higher than 100 is because, by the end of the month we had, less properties and sold more than we had on the market. So it kind of it skews the numbers. But I think the bottom line is you can understand that just about everything that was listed in February for detached homes sold in Calgary. And the benchmark price, $596,400. I didn't think I'd ever see that, but we're seeing it now. You can see from a year ago, the benchmark price was $501,400. So we've actually seen an 18.95% increase in prices just since February of 2021 and rising. If you look over here, we've seen a 6.5% increase in pricing just in the month of February alone. So this is really unprecedented. We haven't seen this. If you do a little history back to 2013, you can see that our previous peak of the market was $516,933 back in 2015. Well, we have far surpassed that. So it is more expensive to own a home in Calgary now than it has ever been in the history of this city. Here's the hard numbers, and this is why, when I say 112%, you can see we sold 1,900 homes, but at the end of the month there was only 1,688 on the market. So we have some lower inventory levels, and we have, of course, very high demand. So last year in February, we had 1,927 detached homes and only 1,123 of them sold. And now, you can see it's quite incredible to see that in the last 3 months, December, January, and February, we've just absorbed all of the inventory. So there's literally less than 1 month worth of supply of inventory in Calgary. So with that kind of demand and that lower level of supply, the prices can only do one thing. So, and that's just to go up, and they have gone up considerably, and they're still going up at this moment. And you can see the average days on market is 14 days, and I can tell you it's even less than that because they calculate the time that there's conditions on the market are factored in there. So if offers come in with conditions within 1 day, a lot of these houses are selling within a matter of 1, 2, and 3 days. Most of the time, you're seeing even sellers put properties on the market and wait for 3 or 4 days and then do an offer presentation as well after that. Let's look at the market distribution. This really tells a lot. And it wasn't that long ago when 25% of the market was between $300,000 and $400,000. Now it's becoming scarce to find any detached house in Calgary under $400,000. $400,000 to $500,000 a very short time ago was over 30% of the market. Now it's even taken a second place. It's hard to believe, but $500,000 to $600,000 price range has now moved into the number 1 spot for the highest demand of pricing in Calgary. And number 2 spot, equally surprising to me, is now $600,000 to $700,000. So this is what I predicted last year was going to happen, and I was right, when I said that Toronto and Vancouver were very expensive and Calgary wasn't, and we would start to catch up, and that is what's happening. And I don't think it's over yet. As you move over to the $1 million to $1.5 million property price range, I can see that that's still strong at 4.49%. It's one of the benchmarks I use, but of course there's still a lower amount of buyers that are in that price range, so we haven't seen that break the 5% range. But the story really is here, and that is that that $500,000 to $700,000 is now the sweet spot for buying a detached home in Calgary. And let me just give you a little bit of a comment on some strategy in buying and selling in this market. And I'm just going to give you a very quick overview. A lot of real estate agents don't have a lot of experience dealing with multiple offers. Many agents have not been into a market like this before. I have had the good fortune of living through 2006 and 2014, although 2014 wasn't as strong as 2006. The market we're in now is very much like 2006. And I can tell you, when you're in a situation where you have, 1 to say 5 offers, I can't tell you enough how important it is that you work with someone who really understands how to work those multiple offer situations. There are a lot of variables to consider, and there are a lot of options to you as a seller that you may not be aware of. For example, you can actually run an auction if you want. You can disclose all the prices, or you can keep it a silent auction. There's pros and cons to doing both. There's a strategy on how to actually bring these offers together and get their best foot forward. And there's also a strategy on which offers to counter and how many different offers you can work at the same time to bring the price up. There is a lot of strategy with that. So if you are interested in learning more on how I do that, just reach out to me. I'd be happy to stop by your home or do a Zoom meeting with you, and I'll walk you through some of the different ways that you could find some great success if you're going to be selling your house in this kind of a market, and you could really maximize your sale price. Even last night, I just sold a property that went for $75,000 over list, and I can tell you that there was some strategy used there to get that buyer to come up that much over list price, and I can tell you our expectations were that we would have been happy with less than that, but we managed to get the buyer to really step up to the plate, and I used some of these strategies. Now, if you're buying a property, this is a difficult time, I know. Trying to buy a detached home, you're trying to get into the market, and you have all these competitive offers. There's also some strategies that can be used on your end. Writing letters, creating a video to the seller, and also working with the listing agent and being able to give them an incentive to call you back for a counter. That's the key, is getting the seller's agent to actually give you a counter, even if another offer is higher than yours. Doesn't mean you have to accept the counter, but it sure would be nice to know, if you're a buyer, what the counter would be from the seller, what it would actually take for you to buy that house. If you knew that, wouldn't that be great? And you could actually make a decision as to whether you wanted to pay that price or not, but you would have at least that opportunity. That's the kind of strategies I'm talking about. Okay, let's move on and talk about attached properties. So here we are at 96.12 absorption rate for attached properties, and that's also just absolutely remarkable to see that almost all of them sold in the month of February, and it's climbed dramatically from December of last year. Our benchmark price has moved to $461,400. That's up 15.76% from a year ago, and 4.89% just from month over month. And if you look at our history here, our peak again was 2015 at 412. There was a lot of people that obviously bought here, and you can see when the market softened, there was many people that really struggled with their price that had gone down. And now if you were the person that has held on, and you want to now be able to get your money out of it and maybe upgrade into a different property, well, obviously right now is the time. And again, there's a lot of strategy with selling and buying in this market as well. I know some of the feedback I get is, well, what if I sell, how am I going to buy? There is a strategy that I use for that too. Like I said, I've been here before, so I can give you some guidance on that. But the point is, we've seen 7.19% increase. I mean, that's just quite remarkable to see that it has gone up in that much in that short a period of time. Now, if we look at the hard numbers, 297 out of 309 have sold. same formula. We have a lower level of inventory. A year ago, we were at 366 and only sold 181. So with that kind of lower supply and this kind of a demand, of course, the prices are going to continue to go up. 26 days on market average. Clearly, the attached properties are not as quite a high demand as the detached are, but not far behind. Here's the market distribution. Again, it wasn't very long ago that the $200,000 to $300,000 range was a big chunk of the market, and now that's moved to $300,000 to $400,000. So you can easily see that people's first choice, if at all possible, is to get into a detached home. But the second choice is to, if you're trying to find something affordable, well, it's clearly easily able to be seen here that $300,000 to $400,000 is the sweet spot there. But to my surprise, I mean, even seeing the $400,000 to $500,000 and the $500,000 to $600,000, that a lot of people have got into attached properties, and it just goes to show there's a really high comfort level now of people that are okay with buying attached properties. I remember years ago it was kind of a stigma. They used to be called duplexes, and it was considered lower income. Not anymore. There's some beautiful, gorgeous attached properties, and people are very comfortable owning them, and especially if they don't have condo fees. And it's easy to see here, even with the $700,000 to $800,000 price range, and that's mostly the infills in the inner city. This market has also really become strong, and it's so good to see because it was soft for quite a while. So here we are in the row house, or otherwise known as townhouse section. These are attached properties that usually in 98% of the time have condo fees associated with them, and they're generally the third choice that people would choose for a property. But wow, 100.37% absorption rate. So this has just moved up dramatically. When you think, a year ago only 32% of them were selling in a month, and now pretty much everything that got listed sold. Our benchmark price here at $321,100, that's up 13.22% year over year and 5% just in the last month. Wow, that's incredible. So, $283,000 was the benchmark price a year ago, and now we're at 321. So I know this is very good news for this sector of the market, because if you go and look at the history, where we peaked in 2015, we were at 323. So, you can see that this was a really interesting market in 2014, and we saw a lot of people buy these properties because the cost of detached homes was high in 2014, 2015. So people got in and really paid a premium. And you can see it really softened over from 2016 to 2020, to think that they dropped to 278, and there was a lot of people here that were struggling with this. And to this day, I mean, we're at 313. We still haven't quite hit the peak of 2015, but the way this market is going, we're certainly going to meet that or exceed that probably in the next 30 days, which is great news if you bought here and you're ready to maybe move into something else now, because you can get your money back out of it and you're ready to get into a different type of property. These properties are in pretty high demand because they are the third choice, but a lot of people that buy them are first-time buyers, investors, people have gone through divorces, that sort of thing, because you have a small backyard, and it's similar to being in a home or an attached property. Anyway, 537 homes out of 535, so easy to see how much of a demand. When you go back a year ago, we had 792 listed and only 260 sold. So no wonder that the prices have gone up. 30 days average on the market. Here's our market distribution. $300,000 to $400,000 now has taken its place, 38%. So you have a lot of people that are in that price range of 200 to 400,000, and this type of a property would be very appealing to them. So the good news about this market, as strong as it is, there is it's just not quite as demanding as the detached sector. So there's a little more opportunity, and it's a little easier to get into this market. Well, for the apartment condo people, It's good news, but clearly not as good a news as the other sectors of the market. 53% absorption rate. I mean, we haven't seen that for a very, very long time with the amount of inventory and softening that we've seen on condos. Condos have really been hit hard in the market downturn. So this is great news for those that would like to be able to sell their condo and move into something else. You can see a year ago, only 18.98% of the listings were selling. Now to see 53%, that's a complete turnaround. But you'll also notice, though, the benchmark price hasn't dramatically gone up. And you got to remember, we still have a fair bit of inventory when it comes to these condos. But we have seen 4.59% increase year over year. So for those people who bought at the peak in 2014, 2015 that have been waiting for prices to turn around, well, you're getting there. You're not there yet, but they're getting there. 246,000 was the benchmark price a year ago. So we've seen some increases, but here's the story. You can see in 2014 we were at 292, 400, and then in 2015 we were at 292, 458. So we're not there yet. We got a little ways to go. We're still at 254. So if you bought here, and you saw all this softening, you still might have to hang on a little longer if you want to get out of your property, and at least get back the money that you put into it. But I can tell you, at least, the way it's looking, you might hit that number in the very short distance future. But also I would consider if you're not too far off and you want to upgrade now and do that before even the prices on the detached or attached homes go even higher, this might be a good time to be looking to move up. Here's the hard numbers. 566 out of 1,068 properties. I mean, what a difference. A year ago it was 1,433. It was the inventory, and only 272. So much lower amount of inventory, much higher demand. 57 days on the market. And our market distribution, you can see, is definitely under $300,000. I mean, it just drops off a cliff as soon as you go to 4 or 5. But primarily because in Calgary, most of the people you can see that buy the condos are looking at just getting into the market. Many of them are downsizing into something where they can sell their bigger property and then live more of a kind of a semi-retired life. You got first-time buyers that buy these, business professionals. So the good news is when you look at Calgary compared to the other major centers in Canada, still pretty affordable to be able to get into a condo for in the $200,000 to $300,000 range. So that gives you a good solid understanding of what's going on. You can see this is a wild and crazy market, but trust me on this, there are opportunities if you've got a good strategy. And please reach out to me. I don't charge for any of my consultations with anybody. You can listen to my experience and my recommendations and some of the strategies that are very successful in navigating this kind of a market. But trust me, there are great opportunities to both buy and sell in this market if you do it right. So, hope this was helpful, and we'll see you all next month, and I can't wait to see what the stats show then.